Why do banks exist? I mean, if we wanted to keep that money safe, wouldn't it be better for us to keep it for ourselves? Lock it up in a metal box or a vault instead of trusting someone else to protect it for us. Why should I trust a stranger when I can lend money myself and earn even a higher interest rate? And you know what? You're not alone in questioning the entire banking system. Andrew Jackson, the seventh president of USA, was also against banking a lot. He hated banks so much that in 1832 he led an entire campaign named Bank Wars, where he decentralized and eventually dissolved the second bank of United States. Andrew used to think banks were evil entities that could ruin the entire US economy. He believed that they favored wealthy citizens of America and could even form alliances with foreign nations, potentially breaching national security. Hearing all of this, it's natural that you would have a pretty bad impression on banking. So, we need to understand why banking has been such a crucial part of our financial system for such a long time. The origin of banking can be traced back to ancient Mesopotamia around 2000 BCE.
This is where the first form of lending actually took place. Temples were considered the earliest banks. It acted as a repository for valuable items and grains. Priests would lend these resources to local farmers and merchants. They also kept a record of those transactions, giving birth to the concept of bookkeeping. In ancient Greece, the concept of banking further evolved with the establishment of money lenders and private depositors. Around 600 BCE, the Greek city of Athens introduced the first standardized coin system.
17th and 18th century marked the establishment of banking dynasties like Rothschild and Barings.
Gradually, banking developed even more, and this resulted in the creation of state-chartered banks and Federal Reserve, which we are seeing today.
Okay, I know, a history lesson about banks might sound pretty boring, but just give me a moment. You've just learned about one of the most important functions of a bank, which is they act as an intermediary between depositors and borrowers. So, what does depositing actually means? Depositing is when an individual puts money into a bank with the expectation of earning a return. In simple terms, it's a form of investment. Now you might be wondering, if people have money, why they can't lend money themselves? Well, they can, but they will be missing out on the four major benefits that bank as an institution can provide during the whole lending process. There are four major benefits of using a bank. Let's assume you are the lender. The first hurdle for any individual is finding someone to lend to. You don't have a database of people looking for loans, but banks do. They act as a massive financial hub with thousands of connections. Whether it's a local entrepreneur starting a business or a family buying a home, the bank has the network to find the right borrower instantly, saving you the impossible task of searching for them yourself. The verification expert. Once a borrower is found, how do you know they are legit? You would have to be a detective, but the bank has a credit management team for that. They evaluate every borrower using the 5 C's, a professional stress test for trust. The 5 C's are character, capacity, capital, collateral, condition. Character. What is character? The banks check the borrower's reputation and history of paying debts. What is capacity? Banks calculate if a borrower's income is high enough to handle the repayments. What is capital? Banks see how much of their own money the borrower is putting up. What is collateral? Banks secure the loan against an asset, like a house or a car, as a safety net. The fifth one of the 5 C's is condition, where the banks look at the outside world. Is the economy of the specific industry healthy enough for this loan to make sense? Constant monitoring. Monitoring a borrower's every move is a full-time job.
They have dedicated teams to track payment dues and assesses the borrower's financial health in real time. Sometimes they even act as consultants, giving the borrower financial advice to ensure their business succeeds. Because when the borrower succeeds, your depositor remains safe. The legal shield enforcement. What happens if a borrower defaults? For an individual, a court battle is an expensive, confusing nightmare. Banks, however, are built for this. They are experts in laws and regulations and have the legal muscle to handle enforcement costs. They go through the entire process of recovering funds, so you never have to step foot in a courtroom.
So far, we have talked about how depositors or lenders can get benefit from a bank. Now, let's shift our focus from the lender's perspective to our borrower's perspective, how they can get benefit from borrowing from a bank rather than borrowing from an individual.
One of the biggest advantages a borrower might receive from a bank is lower interest rates. Borrowers always want to minimize their financing costs, and banks are able to offer comparatively lower rates because they enjoy economies of scale. Managing a large pool of funds is proportionately much cheaper than managing many individual loans separately. Because their operating cost per loan is lower, banks can pass that benefit on to borrowers. Another key advantage is access to large amount of capital. Many borrowers are businesses that require substantial loans for expansion, operation, or investment. It's extremely difficult, sometimes impossible, for a single individual to provide such large sums. Banks, however, can easily pull funds from thousands of depositors and provide a large-scale financing when needed. Banks also offer greater safety and protection. Borrowers who rely on informal lenders or loan sharks often face extremely high interest rates, unfair terms, and even harassment. Banks operate under strict rules and regulations, which ensures transparency, legal protection, and fair treatment for borrowers. In simple terms, banks make borrowing cheaper, safe, and more accessible, especially for individuals and businesses that need reliable and large-scale financing.
Earlier, I talked about Andrew Jackson's opinion on banks. He thought they were the hydra of corruption, but he himself knew that the positive impacts that a bank brings to the entire US economy can't be simply denied. Andrew Jackson was against the establishment of Federal Reserve, but the importance of such central bank can be seen when tackling inflation or increasing the economic growth of the country. Think of the time our government needed money to meet budget deficits or to fund annual development program. Yes, most of that was funded by the central bank. Government borrowed around 98,000 crore taka from Bangladesh Bank in 2023. Not to mention, banks also provide agent banking services that help the geographically disadvantaged people to get financial service. Banks also provide weather-indexed crop-based insurance that protects farmers from climate-induced losses like flood and cyclones. Micro-insurances like this can also help the poor get medical care. Due to globalization, foreign trades have now become a regular occurrence, so more people need foreign currency, and this also increases banks' role in our financial system because they facilitates the foreign exchange program, which is the conversion of one currency into another.
So, what is the main takeaway from this video, you may ask?
Regardless of income, class, or geography, banks have always strived to provide financial services to everyone. So even though this industry is prone to diverse risk, you cannot eliminate bank from our financial system. Now you know why banks really exist. Hopefully you have liked this video. If you understood everything clearly, please click the subscribe button, like the video if you have liked it actually. And next time I'm gonna bring more business related, finance related videos. Stay tuned. Bye bye.